Is volatility back in the markets following a recovery from March lows? Joining me to talk about what investors can expect now is Frank Holmes, CEO of U.S. Global Investors. Frank, always a pleasure to have you on. Thanks for joining me today.
It's great to be with you and then talk about my experiences in my lockdown, but I'm back in my office, as you can see.
Yeah, you look great, and everything looks fantastic in your office. Now, Frank, I wanted to start by asking you about your sentiment in the markets. We've seen a lot of volatility this week following the Fed's announcement of keeping rates near zero. What's your take on it? Can we expect volatility to continue in the stock markets?
Oh, absolutely. The volatility has expanded a lot. The daily volatility used to be 1%. That meant 70% of the time it was a non-event for markets to go up or down 1%, and now it's pushing 2%. That's quite significant. In fact, that's greater than bullion itself. And so I think that as all this money, the trillions of dollars being printed, somehow showing up in the marketplace and showing up in people's hands is creating this sort of volatility. And also there's lots of negative uncertainty in the news. It's an election year also, so there's lots of sparks flying back and forth, and that just makes the greater volatility. And you have to have the stomach and have the mindset to be able to trade around that volatility.
The timing of the correction this week was right after the Fed's announcement. Now, was this in any way related to the Fed, or did this have more to do with coronavirus fears?
You know, David, we have our what's called our syndicator, our internal global indicator of all these commodities and various indices. And we get these extreme overboughts and oversold. Last Friday, it was at a 90 rating. It never stays up there for more than a week. It's never. And as soon as it goes over 80, get ready for a big correction. And then when we looked at the stock market's volatility, we call them sigmas, and we looked at one standard deviation move over 60 rolling days. And what we found was that at the beginning of this week, the market was up 4 standard deviations over 60 trading days. Now, if I went back over 20 years of data of looking at the yearly rolling period, we're back in the middle. There's nothing extreme. It's neutral on an annualized basis over 20 years. But over a quarterly basis, we're due for a correction. And I think a reason comes out of marketplaces to been stretched so long, and now it's going to be the Federal Reserve. But I really don't think it was the Federal Reserve. I think it was all the negative headlines on the coronavirus surge. He's talking about getting a surge in Texas, where I am, one in Florida, these various states. And there's a punch out in UK with the airport, Heathrow Airport, and particular British Air want to sue the government because they can't get people flying. If you want to fly over there, you only get a 14-day quarantine. You fly through Ireland. Like all that negative news, along with the coronavirus surge, creates a knee-jerk reaction.
We just reopened the economy in most places. Can the government afford to lock it down again following the second wave?
No, I don't think so, unless they all agree, the cartel of the G7 and particularly then the G20, to not penalize each other and all print a lot of money. So therefore, on a relative basis, they all look attractive. However, real assets then start to surge again. And that's the real bullish part and the thesis for owning gold and silver.
Yeah.
And I think that Powell's comments yesterday should be really seriously taken to heart. He said that the government will continue to forcefully, proactively, and aggressively print money and facilitate economic turnaround. Now, you don't hear those words from the Bank of Canada. And so the leadership is really going to come from the Fed, Powell, and this is a guy with tremendous private equity experience. He has lots of capital markets experience. He's also disciplined as a lawyer and a businessman, and he's making these very strong statements. So that means they're going to print, and I think you're going to see another couple of $1 trillion in the summer come into this whole thing. I've said from day one, I think it's going to take $10 trillion, the U.S. alone, and that's forgetting what Europe is spending. They also on a huge binge of spending, Japan and China. And this is what makes gold such a super attractive asset class.
Mm-hmm. Yeah, let's talk about gold now, because now as an investor, Frank, are you at all relieved at the fact that the Federal Reserve, like you said, is expected to continue quantitative easing?
I think that it's a global phenomena, and what people have to remember, since 2009, the central bankers and the finance ministers of the G20 countries function like a cartel, and since 2009, they've been functioning on synchronized taxation and regulation, and now it's synchronized printing of money to deal with the coronavirus attack, and I think that that's what's unprecedented. So coming back is that when you see all this money being printed out of thin air in Switzerland, they immediately go buy Apple. They're going to buy stocks. They're going to pay a dividend higher than they're printing money. They're going to buy Clorox. You're seeing now the Federal Reserve can't do this in the country, but they can go in the futures market, and they've been buying ETFs. They've been buying bond ETFs, in particular junk bonds and corporate bonds, to try to get those yields down so that there's no stress on the economic engine. The other part's really important to recognize, which I know so dearly, is my JETS ETF.
Yeah.
Because the government has learned that there's 1 in 15 jobs in America are linked to the airline industry. So if you look at Vegas, which 90% of the traffic to Las Vegas is airplanes and jets. And there's now 200,000 empty beds and 300,000 people unemployed. They better get people flying there, because then they get those rooms filled and they start hiring more people to get the overall economy going. It's a multiplying effect. So I think there's a real push. And they've learned what after 9/11 that they didn't fast enough go to fast track the growth in the airlines industry because of the multiplying effect. And after 2009, this time, $25 billion, we're going to do everything to help you out. And the sad part was Warren Buffett dumped all over the airlines, and they're up 40% since he did his price reversal. But I think what people recognize, in August he turns 90, and 82 is the median age for people that die from the coronavirus. So I think anyone that's older is going to be much more cautious, risk averse. Mm-hmm. So I respect him, but he didn't invest in the overall economy either. And a lot of asset classes have performed. He doesn't like gold, but gold has outperformed Berkshire for the past 20 years. And Franco-Nevada, my favorite gold royalty company, has more than doubled the performance of Berkshire Hathaway for the past decade. So I think the fact that he doesn't like airlines should not turn around and all of a sudden say, then therefore you can't like airlines, because he's missed a lot of great trades, in addition to Amazon and Google.
Just on that note about airlines real quickly, you mentioned that we might, we're going to see a recovery soon. Are there going to be structural changes in the airlines industry during this recovery phase?
Well, let me share with you that at the bottom, the market cap of Zoom was greater than all the public companies, airline public companies.
Yeah.
And I sort of give you an idea. I think when we come out of it, travel is going to change the pattern. I think it's going to be a lot of stress on real estate. Downtown real estate in Toronto, Montreal, New York, etc. There's going to be a pattern change there. The value of the real estate and the leases, etc. And it's going to be a slow grind out, but we're going to see the changes. Coming back on the airline industry, what's really fascinating to me is that I really felt the pain in the first week of March of assets just halving. And all of a sudden, out of nowhere, we started seeing big buying of our JETS ETF.
Yeah.
And I kept trying to find out why. Where's this money coming from? And interesting enough, a lot was coming from online brokers. In particular, Schwab said they opened 300,000 accounts in March. TD Waterhouse said they opened 300,000 plus accounts in March. And Robinhood opened 1 million accounts. And we saw all of a sudden we've gone from having 300 accounts to 34,000 retail investors, the millennials that couldn't party, unable to go to the beaches, always loved to go on a quick holiday, fly here and enjoy the weekend, etc. Were stuck, but they knew about airlines. And all of a sudden they became day traders, and one of the assets they bought was particular airlines. And we saw $1.5 billion come into that ETF. And interesting enough, the bottom was raised around roughly the time of Buffett saying he was getting out of the airlines, and they start to take off. Now, what's interesting is that a lot of these people have done research, and the feedback we've had is that after SARS, Asian Airlines 6 months later jumped 120%. And after 9/11, 6 months later, airlines were up 80%. And after 2009, bottom of March of 2009, 6 months later, they're up 80%. So all of a sudden, we have a whole bunch of young speculators, which the capital markets need. that come in and all of a sudden try to look for investment opportunities and trade stocks. And what really shocked me, David, is that most of these millennials use YouTube to get knowledge and podcasts. They're very big on listening to it. And on YouTube, I went and did additional research and found guys that have 2 million subscribers. A young kid that has 283,000 in 2 years out of the UK, and he's 19 years old, telling you all about the airline industry. So there's a fascination with the millennial investors out there of the airline industry. The other thing which is so good for the Kitco audience is that when you go to the toolbar at TD Waterhouse or Schwab or any of these other online brokers, there's no mention of gold on the toolbar. But at Robinhood, there is. Gold is an asset class. So I think it's really positive for these young investors who are more astute, looking for opportunities, and they're more speculative inclined, and which is probably the smartest thing for them to be, is to be able to take more growth adventure investing when you're young.
Why do you think gold isn't given as much attention by these millennial investors as some of the other stocks like airlines, risk assets, for example?
Well, we saw in our GoAU ETF a line like this in new accounts coming in online.
Wow.
Yeah, no, it's happening, but they're small accounts. So I'm told that when you look at a Schwab account, it's $50,000, and at Robinhood, it's $10,000. But still, between 34 and $300 million of their money came into Jets ETF. And I think that that's what's remarkable. But the fact is that Robinhood allows you to buy Bitcoin. There's no fees, there's no commissions, etc. And you can buy different golds, gold ETFs, gold stocks, etc. So there's more of an encouragement in gold as an asset class there. You're not seeing that on the portals in Canada, not yet. And Canadians institutions are way underweight at gold stocks. And probably I understand why. And the generalists now are buying gold stocks. The best performing S&P gold stock is the only one that's gold is Newmont. And why? Because it has free cash flow. So in this last quarter, into March, most of the S&P had free cash flow at the end of December was wiped out. And those stocks that had free cash flow far outperformed the overall market. And Newmont was one of them. And Newmont was one just on a tear. Not only was gold going up, but it has free cash flow. And now you're seeing Yamanas, you're seeing Barracks, the other companies articulating that they have a free cash flow yield. And it's the generals that comes in is buying those stocks. So you're going to start seeing this sort of bifurcation and coming back on the royalty companies, the three big ones, Royal Gold, Wheaton Precious, and Franco-Nevada. I think in the first quarter, they had close to $500 million of free cash flow.
Okay. Now, offline, you mentioned that gold stocks need two ingredients to rise: rising gold prices and the rising stock market. And are you saying that we're going to get both this year?
Absolutely, because the president is focused on the stock market. And I think that that's what's really important. And to me, it's most interesting when the first movie came out on Wall Street that was so negative. Everyone thought, and what happened, and you found all the business schools, all the kids graduating wanted to go to Wall Street.
Sure.
Greed is good. Remember that? Greed is good with the Gecko.
I do, yeah, great movie.
And so most of the culture society said, well, no, greed is bad and no one's going to go there, etc. It did the opposite. So I think that they turn around and say they don't like his politics, they don't like his rhetoric, but they like the stock market because he likes the stock market. So these are the paradigms that we're dealing with. These are differences, and it's no endorsement of the president, except for if you follow sentiment tools and sentiment analysis, what he talks about positive and negatively, it shows up that those stocks go up or down very quickly. Currencies can go up and down very quickly. We saw that what happened with Boeing. We've seen that with Sony. We've seen that with the Mexican peso, that they can have a surge up or down on what his thoughts are. So today's markets are defined by, most of the trading are by quants. And quants look at words and they listen to those words and they do regressional studies and they say, those words mean this. Quickly they jump in. Gold stocks, they get crushed very quickly, so often it's off a press release. No gold analyst was able to read the data and all of a sudden do the calculations and then say, oh, I'm going to sell it. It happens what used to take 2 weeks, it happens in 2 hours.
Fantastic insights, Frank. You've given us a lot to think about. Thanks for coming on the show today.
Be bold and make sure you got your gold.
Frank will be one of the speakers at the Minds of Money Online Connect, which is a virtual mining conference happening later this month. Stay tuned for that. And to the viewers watching, if you have any comments on where you think markets and gold are headed, leave your thoughts down in the comment section below. Thanks for watching Kitco News. Stay tuned for more.